I'm Patrick Boyle, partner in charge of Eisner Amper's audit and assurance practice, as well as the technology practice in Pennsylvania. Eisner Amper is proud to support PACT and this year's Capital Conference. I'm excited to welcome you to day 2 of the technology track featured company presentations. We're on the road to the Lion's Den. First, I'd like to thank all of our great sponsors. I hope you will learn more about them on the conference site. I'd also like to thank Industry Track Vice Chairs. For Healthcare, Capilla Ratnam, partner at New Spring Capital. For Technology, Glenn Bresner, co-founder and managing partner of Activate Venture Partners. And for Early Stage, Doc Pargi, managing partner of SRI Capital. Their work created the great content you're seeing in these sessions. And now, I would like to introduce Emmanuel John, partner at Baker Tilly. Thank you.
Hi, I'm Emmanuel John, partner with Baker Tilly in the Philadelphia office. Baker Tilly is a top 10 national coast-to-coast audit, tax, and consulting firm. Our 30,000 professionals in 147 countries around the globe is purpose-driven to protect and enhance our clients' value today for tomorrow. Baker Tilly is a major sponsor of the Capital Conference and support PACT's mission to drive innovation and growth in the greater Philadelphia area.
New this year, we're giving all of you the opportunity to rate our featured companies. This will help our Lions determine who will be the final 3 on September 24th. To access the ratings, open the PACT Capital Conference app on your mobile device or desktop. Again, you can use your mobile phone to scan the QR code that's on the screen for quick access. Once you've logged in, the access code to join is CapCon 2020. Again, CapCon 2020. In the Featured Companies tab, select the company you'd like to rate and rate it from 1 to 5 stars, with 5 as the best. You can rate as many companies as you like. We will close the rating function the week of September 14th. Again, help us guide the Lions in choosing the final 3 companies for the Lion's Den of the PACT Capital Conference on September 24th.
And now, I'd like to introduce Michael Harrington, partner with Fox Rothschild, the sponsor of the technology track. Thank you and enjoy the presentations.
Welcome everyone to the second day of featured company presentations in the technology industry track. This is Michael Harrington. I'm a partner with Fox Rothschild. On behalf of all of my colleagues at Fox, I want to welcome you to this important aspect of the conference. For those of you who might not know us, we are a national scope law firm with a strong presence and focus on the technology, healthcare, emerging growth business practice. In terms of PACT and the Capital Conference, we are very proud sponsors. We've been with PACT since the beginning and huge participants in the Capital Conference each of these years. This aspect of the conference, I think, is one of the best. This is the featured company presentations. And as part of that, you are going to get a chance to hear from some of the best and brightest of the upcoming companies in this region. I'll be introducing you to each of these companies, so stay tuned for some terrific presentations from some great up-and-comers. RackWare Inc.
Hi, my name is Brian Gobbett and I am CEO here at RackWare. A little bit about myself to start with. I'm from Ireland originally. I came to the US in the mid-90s, straight out of college. The master plan at the time was to spend a year in New York City, a year in California, move on and spend a year in Australia, New Zealand, work my way back up through Asia and get back to Dublin when I was still in my 20s. I ended up spending 2 years in New York City, really enjoyed that, came out to California in 1998, and I've been here ever since. So very far behind on the master plan, but I've thoroughly enjoyed my time here in California. I've worked for some great companies, including Cisco and Siemens and Ericsson, and big European companies who have operations out here. I've been with RackWare since 2015. So maybe let's move on and talk a little bit about RackWare. So RackWare is a cloud computing company with 3 main use cases, or 3 main focuses, being cloud migration, disaster recovery, and hybrid cloud management. So migration, what does that mean? Basically what it is taking all elements of an enterprise's data center and moving them into the cloud. Disaster recovery is basically protecting those workloads when they're in the cloud. And what we do there is we replicate the entire environment to a geographically remote location, providing protection from things like, floods, hurricanes, fires, earthquakes, etc. And the third use case is hybrid cloud management. And what we do here is we allow enterprises to manage all of their resources, whether they're still on-prem, in the cloud, or spread across multiple different places. RackWare was founded in 2009. We have a little over 50 employees, about 20 in the US, a little over 30 in India. Our 4 locations allow us to support worldwide operations. We have customers in Australia, various Asian countries, Middle East, Europe, UK, South America, and of course, our primary business is still here in the US. We believe there's a huge market opportunity ahead of us, and I'll touch on 2 points here. The first is the DRaaS market is already building off a pretty big base of about $4 billion and growing at a CAGR of about 41%. That, coupled with the huge legacy backup market where we're really pushing for and seeing a convergence with disaster recovery, gives us a really, really big opportunity. The second point I want to touch on here is cloud migration. Recent numbers indicate that 60% of Fortune 500 companies have less than 10% of their workloads in the cloud, even though they're really trying to get their workloads into the cloud. And a lot of them are reporting kind of hitting a ceiling at getting about 25% of their workloads in the cloud. What prevents them going past 25% is they get difficult. The migrations become much more difficult after that first quarter or so. And that's kind of where we come in. RackWare has a proprietary replication technology, which is unique and really separates us from our competitors. It is truly an any-to-any technology. So we can migrate any Windows, Linux, or container from literally any data center to any cloud, or any cloud to any cloud. And that really differentiates us from our competitors. Let's talk a little bit about RackWare's key partners. This basically falls into 3 buckets. The first bucket are what you see on the left-hand side, which are 3 of the 5 largest cloud service providers. We have very well-established relationships with both Oracle and IBM. And the Oracle relationship is very interesting from the perspective of Oracle launched their Gen 2 cloud in 2018. And RackWare is the only solution that can migrate to or do DRaaS in that cloud. Technologically, it's a great cloud, but our competitors find it very difficult to work with it. We have a budding relationship with Azure, and they recently invited us to integrate into their Azure Migration Hub, and we believe that's a partnership that's going to grow quickly over time. The second bucket is the federal bucket. Our primary partner here is GIT, or General Dynamics. General Dynamics have the contract to migrate certain federal agencies, including DISA, into the cloud, and they're buying licenses from us to enable that. The third bucket is the GSIs. The GSIs tend to do most of the cloud services for all the big enterprises. The 2 GSIs we've partnered with so far are DXC and HCL, but we are in discussions with multiple other GSIs, including Accenture, Ernst & Young, Deloitte, and KPMG. So cloud is a competitive landscape. And again, I would separate our competitors into 2 buckets. One bucket is kind of legacy backup players who are trying to make that leap from backup to cloud services. And that's companies like Veeam and Commvault. And the other bucket are kind of the newer players, of which I think the one really worth mentioning is Zerto, who we tend to see as our biggest competitor. In addition, there has already been quite a bit of consolidation in this space, including Google buying Velastrata and AWS buying Cloud Endure. So a little bit about RackWare's funding history. RackWare has raised $21 million to date. We've done a Series A, B, and a convertible note. We did a little over $5 million in revenue in 2019. And we're now looking to raise something in the region of $5 to $7 million to build out our sales operations, expand our marketing effort, and a little bit to grow the engineering team, especially around our newer product in the Kubernetes space. If you are interested in participating in that round of funding, please feel free to contact me either at the email or cell phone number listed here. Sincerely, thank you for taking the time to watch this, and I hope to talk to some of you in the near future. Thank you very much.
Space Eyes.
Good morning. I'm Jaden Bain, CEO of Space Eyes, a geospatial analytics company based outside Philadelphia. First of all, let me start by thanking PACT for giving us the opportunity to present over here. I'm over here to talk about my company, Space Eyes. We're in the geospatial analytics business, providing Earth intelligence as a service. So just by way of background, I've been in the maritime domain my entire career, with a decade at sea, onto operations, management, and now space-based Earth intelligence across the maritime spectrum. 70% of the Earth's surface is water, where change detection is an anomaly, considering it enables $20 trillion in global trade. The market size for geospatial intelligence is $3.5 billion, and we are addressing initially the $2 billion defense marketplace, which is right now served by powerhouses like Maxar, a public company who has over 325,000 users, and a couple of other startup companies. The problem with Earth intelligence faces is the lack of timely insight due to stovepipes. And we address that by doing contextual analytics and threat evaluation on the edge in the Amazon cloud, while aggregating pixel and non-pixel data. We aggregate over 50 unique pixel and non-pixel data inputs, perform automated threat evaluation in the maritime domain with automated results, delivering insight with evidence. That's the key. We deliver it with evidence, and that helps the customers make tactical decisions quickly. Our customers include the U.S. Air Force, the U.S. National Geospatial Intelligence Agency, Government of Singapore, among others. And we'll be expanding our customer base across the Department of Defense and the intelligence community and the U.S. coalition partners. Our revenue in 2020 was $1.5 million, and we are accomplishing 20% EBITDA. Next year, 2021, I expect to be north of $5 million. And in the near term, I'm expecting to be above 50% EBITDA, which is substantial, and it's a nice rate of return for an investor as we grow. So we have cutting-edge technology. It's proprietary geospatial analytics. It's called CATE, Computer-Assisted Threat Evaluation. And I have a team of professionals who are helping me execute. And they have a legacy of delivering with 20 to 40 years of experience. So we all know it's all about execution and addressing an unmet need. And why now, why us? Like I said, we have substantial experience. We have critical mass of sensor collections, and at the same time, home-based commercial analytics is on the rise. Our CATE technology is very robust, architected to also leverage enabling technologies on the cloud in the Amazon Web Service environment, and to be scalable. We're providing our customers near real-time insight and really helping them achieve information dominance, which is the end game for the customers. So the market for geospatial insight is exploding, led by an insatiable demand by the Department of Defense and the intelligence community as asymmetric threats are increasing. And we deliver insight via APIs, dashboard, portals, and it's really very desirable now in the current environment that we live in. Our focus area initially is in the South China Sea and the Eastern Indian Ocean. Like I said, I'm proud of my team. We shortlisted Jerry Burke, who's been a CFO at a couple of other companies. She's a smart lady. And I've got my other team who I've been working with for a while. And not to mention a lot of the other team members, we're a team of 15, and a lot of my engineers are really smart folks with IEEE awards, and we ourselves won 2 corporate innovation awards over the years. So we've, got a good team. We're building good products. The customers recognize it. It's a growth industry, and we feel that we're in a good spot. So having said that, some more details about our team, and I would end by saying that if our business model complements your portfolio, then do contact Tom Dwyer at Troutman Pepper as we're working with his office. We look forward to hearing from you. And in any event, have an awesome, event. There's lots of other good presentations coming down, today. And thank you for your time. I appreciate it. Stay safe. Bye now.
Hi, QA.
Hi, my name is Sam Golan, founder and chief executive officer of HiQA. As you've probably realized from hearing my weird accent, I was born and raised in Israel. At the end of 1999, I decided to temporarily move to the United States. In finding a qualified CEO for a startup, I relocated from Israel to the US. Well, that temporary move turned out to be more permanent than expected. And here I am 21 plus years later. I must admit, I am workaholic. With more than 30 years of hands-on experience, successfully founding, co-founding, building, leading and managing multinational software companies and expanding them internationally. Some of those companies include Cimatron, a CAD/CAM solution I developed throughout all stages across a range of manufacturing-related industry that was eventually acquired by 3D Systems. SmartIM, which was the first true PLM solution, acquired by Dassault Systems and now known as Innovia, and Freedom Tech IT, one of the earliest spearheaded IT remote managed services. I studied electrical engineering in my younger years. I eventually decided to pursue a degree in economics and business administration at Tel Aviv Open University, where I was able to use my real-life business struggles to argue with professors who tried teaching me the theories behind business, which they successfully did to some extent. I'm happily married to my first and probably only love, Dina, and together we have 2 sons, 1 daughter, and 3 great grandkids. I am sport addicted, and I like to spend the free times I have either cycling outside or skiing during the colder months. Thank you for your time and for taking interest in my story. Hi, Sam Golan, HiQA founder and CEO, the Enterprise Manufacturing Quality Management System. The complexity of today's supply chain within the global market environment introduces new business needs that are far more demanding than what present quality system provide. Currently, the solution available at the OEM level and on higher tiers suffer from lack of capabilities that focus on metadata rather than manufacturing and quality requirement, which is one of the most critical part in communicating with the supply chain. The manufacturing industry is constantly growing despite of COVID-19 impact. A single standard car has about 40,000 parts, and it is growing up to 60,000 for electric or hybrid car. And for the autonomous car, it may reach 80,000 parts. In comparison with the aerospace industry, Boeing 737 has about 1 million parts, and it goes higher with newer and larger model, up to 6 million parts for the 747-8 series. Every 20 seconds, iPhone is built, supported by hundreds of assembly lines, resulting about 500,000 iPhone per day. We can add more data with all other industries as medical, oil and gas, and defense, but who makes all these parts? Hundreds of thousands of worldwide suppliers, ranked by tiers, produces these parts. Millions of parts are manufactured daily, and they are made of numerous raw materials and have different manufacturing and inspection processes requirements with frequently changed regulation. In just reading these few quotes on these slides, we can learn very well about the challenges through the Dreamliner supply chain fiasco. Currently, the manufacturing supply chains within any given industry are missing some critical capabilities, such as avoiding supply chain interpretation by getting manufacturing requirements on a 2D or partially on a 3D model. Additionally, OEM lack the ability to automatically and securely manage quality requirements directly from file and seamlessly communicate, manage, and integrate with their supply chain from the bidding stage through designing, manufacturing, engineering changes, and with delivering parts on time, on quality, and on budget. HiQA addresses these challenges. HiQA flagship product, the Inspection Manager, is currently being sold in North America and worldwide, directly and indirectly, and has more than 600 customers from small to mid to a large enterprises. The Inspection Manager is a comprehensive quality management system that combines proprietary optical manufacturing and quality recognition with artificial intelligence dictionary. This enables manufacturer, small to large enterprises, and OEM to automate their entire supply chain externally and avoiding interpretation, labor intensity with a significant cost cutting and expedited delivery time. Among HiQA 600 plus growing customer base, you can find small to mid-sized manufacturing companies as well as large OEM as BAE, Lockheed Martin, Blue Origin, Bosch, GAE, McAllen Aerospace, Mercedes, Rolls-Royce, Stryker, Subaru, with Boeing 737 and 737, and Toyota. HiQA, founded 10 years plus ago, headquartered in New Jersey. In the first 5 years, we invested and developed our unique proprietary technology. And with the first year, with the product launch, we had immediately 35 early adopters that are highly satisfied from the solution quality. Our team is built on expert and experienced people in both areas, technology and businesses. We have worldwide distribution and support in North America, Europe, Asia, Asia Pacific, and Latin America, with Europe sales and support office located in the Netherlands. We doubled our revenues in the last 2 years, hoping to do the same in 2020, despite of the challenging time with the COVID-19. And with that, I wanted to thank you for taking the time.
Trust Exchange.
Go ahead.
Hello, my name is Ed Sullivan. I'm the founder and CEO of Trust Exchange. I am a local entrepreneur. I was raised here in the Philadelphia area. I went to Drexel University. I have a degree in electrical engineering. My first job out of Drexel was as a nuclear engineer at Limerick. And I basically caught the entrepreneurial bug when I was, I guess in high school. I had a paper route, and I really enjoyed the freedom and the ability to kind of make my own hours. Not really, I had a morning paper route, so I had to get up early and get the paper delivered. But basically, I created 3 local companies, raised about $100 million in my career, 20 plus years, $700 million in exits from those companies. And the last 2, Trust Exchange and RA Systems, haven't exited yet. So I think there's a lot of value to come. I love it here in the Philadelphia area. One of the reasons I'm trying to raise capital here is I don't want to move to California. I had to move ARIA at least partially out there, and I'm really dedicated to the entrepreneurial ecosystem here in the Philadelphia area, and I want to build the next great Philadelphia company.
So Trust Exchange is a business information platform that is a marketplace, kind of like a part of a new breed of software platforms where all of the players in a given market are brought together to create supply, create demand, and add value for each other. And we're doing this in business information where businesses can connect with each other, collaborate on information, and exchange that information in a much more efficient way than it's being done today. So as everyone here knows, the world has changed. The collaborative economy is dramatically changed in the past 5 to 10 years with the emergence of several firms that have started doing this in the consumer space. So, you know, Waze, Airbnb, and Uber, which are inverted firms that don't own any assets to speak of, but they've disrupted each of their respective industries in a dramatic form and have captured the vast majority of the value out there. So we think that similar to Uber, we can build a virtuous cycle around business information. So this slide comes from Uber, where they went city by city, created an amazing, radically different experience for riders and drivers, created better value, faster pickup times, more cars, more rides, more contributors, city 1, city 2, city 3. We think that there's an opportunity to do the same thing in our industry, business information, but doing it vertical by vertical, finance, insurance, healthcare, etc. So we think that we can similarly create a radically different customer experience, significant economic efficiencies, and expand the total marketplace beyond what it is today. And in many cases, we think we might be able to dwarf the total market. So the current problem is that businesses spend almost $1 trillion, well over $1 trillion a year, depending on the source, checking on each other, monitoring each other. And the tools that they use to do this are linear tools that don't really work in this exponential world. So this quick diagram just shows kind of a 5x5 matrix with 3 things that need to be exchanged. Now imagine you're like a big enterprise where you have thousands of vendors, partners, customers, etc. The ability to exchange this information is exponential. It's manual, email, faxes, PDFs, scanners, etc. And what we've created is a sort of social network that allows businesses to connect with each other, subscribe to each other, broadcast information in the same way that you would broadcast your kids' pictures or your vacation pictures or a status via a social network like Facebook. We think it's a very large opportunity. As mentioned before, the total revenue in this market is 1.5 trillion globally, multiple sources there, but that was kind of the top end. We're initially focused on a couple of key areas, but the key applications for this are governance, supply chain, customer information, and the verticals are healthcare, finance, pharmaceuticals, etc. So our strategy is to, first off, build standalone value in our product. Make sure that our product is able to go out and compete with the current state of the market. We do that by going into the market, acquiring a customer. The next step is to find partners that can help us do a partner pull strategy where they will go embed their best practices into our platform, sell them to their customers, and bring them onto our platform, and we share the recurring revenue. And we've been doing this pretty successfully on a small scale, and we're ready to kind of take this up to the next level and get partners in multiple verticals. Our business model is today subscription-based, software as a service. It's a multi-sided market. So what we do is we charge one side and give it away to the other. So we'll charge a bank and give it to their vendors, charge a pharma company and give it to their vendors, so that they can kind of exchange that information based on the rule set in their regulatory zone. And we charge based on how many seats, how many admins, kind of the classic SaaS recurring revenue business model. But we plan to drive our roadmap to add value to multiple sides, bringing in marketplace, bringing third-party providers where they can come in and put information into the network that can be distributed and sold at all of those different layers. We've won a couple of awards and certificates. We are a Amazon AWS Advanced Technology Partner, which has been great for us because they are walking us into opportunities at very large companies. We won the RegTech Top 50 globally out of a firm in London that evaluated us against a lot of other FinTech, RegTech companies. And locally here, we won the Philadelphia Tech Disruptor Awards a few years ago. We think that now we have a sales and marketing problem for execution versus, build the product, figure out the assumptions, figure out the business model. We think we have a lot of that done based on my history and my team's history. We think that we have a good shot of, if we raise about $5 million, to be able to turn that around into a $5 million of recurring revenue within 24 to 36 months post funding, and then just kind of grow from there, either do another round when we get to like a $50 million enterprise value, or figure out what we want to do in the next steps. But it's a very powerful business model, as most of you know, and we think that we have a great chance of succeeding. Here's our progress to date. We put out a free version, so we know it scales. We have 22,000 users tracking 100,000 businesses. We kind of repositioned that into an enterprise version of the product, and we've begun closing enterprise deals in the past 2 years. There is some uncertainty, however, around COVID. We have some deals that we closed last year. Those customers it's uncertain whether or not they're going to continue operations. We have partners that are kind of in the same boat. We have other partners that the rollouts have been delayed, like, for example, in cannabis compliance. We were in the buying process with 20 different banks. That's all on hold. But we think that it's still a really big idea. We add a tremendous amount of value to both sides of the table, and are, even with this COVID uncertainty, think that this is going to be a large, successful company in the future. So thank you very much for your time, and I hope to talk to you in the future about my company.
HRSoft.
Morning. I'm Dave Kennedy. I'm the CEO of HRSoft, and I'm recording this morning from my home in Yardley Borough. Yardley Borough is a nice little town in Bucks County, about 10 miles south of New Hope. Lots of little shops, restaurants, cafes, taverns. If you haven't been here, everything is open for outdoor dining. If the weather happens to be nice this weekend, please come down. Support our local establishments. We'd love to see you here in downtown Yardley. I'm going to talk today about HRSoft. HRSoft is a software as a service business, and we are growing fairly rapidly. We've got $5.1 million in ARR projected for December 31st of this year, and we're on track for that. About 80% of our business is recurring revenue, and we've got currently about 86 enterprise clients. And our market is large enterprise clients headquartered in the US and Canada, and we add 2 or 3 clients a month on average. What we do is serve the compensation function in these companies. All large companies in the United States and Canada have a compensation function. Everybody has some sort of annual or quarterly process whereby they give salary increases, they give bonuses, they give equity awards. And more than half of those companies are managing these processes manually. They're using spreadsheets, and they're using email, and they're using PDFs. And this is true from companies with 1,000 employees up to 40, 50,000 employees. So we provide software to streamline that process, and that saves them time. And it also saves them a lot of money. There's tremendous ROI on this. We've recently built a new technology platform that underlies our products. It's a low-code platform, and that's increased our ability to roll out new products. So we're pretty excited about that. And the product lineup now consists of 3 products. CompView is our flagship product. We've had that for quite some time. RewardView was a new product that we brought out 6 months ago, and we've had some great wins on that. McAfee, global security provider, is using that to communicate the value of total rewards to all of their employees around the world, 15,000, 16,000 employees. And the newest product is a pay-for-performance product, and that's going into implementation with a large healthcare provider on the West Coast. An organization with about 10,000 employees is going to be using that to track goals and incentives and people's performance against their goals. And then we have a great product lineup coming out, and we believe with the new platform, we'll be able to release those products on a cadence of about once every 6 months. We think this is great for two reasons. One is that each time we release a new product, we increase our addressable market. With the current product lineup, we've got about a $2.1 billion addressable market. As we release new products, that addressable market grows. And that's the other great advantage of that, of course, is that as our client base grows, we have more product to sell into the client base, so we can get a greater wallet share of our clients and greater total value per client as we add products and we add clients at the same time. Client base tends to skew towards industries that have high value human capital. And very luckily for us, these companies were little disrupted by the COVID-19 crisis. We've been able to grow the business throughout the current pandemic, and actually had our best month in terms of new bookings in May, when we closed two of the biggest deals that we've done since we started the business. We've got a two-track sales channel go-to-market philosophy. We have a partnership channel, and the software partners are the most interesting in that channel. These are large providers of core HR systems, systems of record, payroll systems. When they have clients that need software to manage compensation, they bring those clients to us. We did the first of these we did was with Ultimate Software in April of 2018. We've closed more than 38 deals with Ultimate since we've launched that partnership, and we won Ultimate Partner of the Year award this year, which is something that we're pretty proud of. We have a deep integration now with ADP that we finished, and the partnership with ADP Vantage and ADP Workforce Now, which are their enterprise platforms, will launch with the ADP Salesforce and ADP account execs in October. So we're excited about that. We think that's going to be as big or maybe even bigger than the Ultimate partnership. And of course, we also have a traditional direct sales channel, and that relies heavily on demand generation and the pretty well thought out sales process that we find works very well. So that's the go-to-market strategy, and it's been working quite well for us. The financials are in the deck, so I'm not going to spend much time on them other than to say that we've been able year over year to grow GAAP recurring revenue 50% or more. And we think that with the completion of this round, we'll be able to accelerate that growth as we have more to invest in the channels, invest in the sales force, and invest in our ability to roll out new products. The team is quite experienced. We've all been together here at HRSoft for 5 years or more, and a few of us have worked in different businesses together, businesses that we've built in the past. So we've got a great team. And this round really is just meant to continue to build upon what we've already proven to be successful. We're going to increase the resources that we devote to sales and demand generation, increase the support we give to channel partners. We're going to increase our ability to develop new product on the platform. And one of the new things we will do is increase our bandwidth and headcount devoted to selling product into our existing customer base. We think as we expand the product set that's going to become pretty exciting for us. So that's HRSoft in 5 minutes or less. If you like what you heard, please don't hesitate, reach out and contact me. I'd love to share more about it. And we will stop it there. Please don't hesitate, reach out if you'd like to learn more about HRSoft.
Viget.
My name is Andrew Wolfington, president and co-founder of Viget. I grew up here locally outside Philly, going to Malvern Prep, and then I lived in Baltimore, going to Loyola. Next, I was in Miami for 3 years before moving back here to the city that I love. As I was moving around, I could always count on sports to meet new people and make new friends, and I want to bring that competitive culture and camaraderie to everyone throughout the U.S. Can you Viget?
My name is Andrew Wolfington, one of the co-founders of Viget, a gamified social network for sports fans and bettors where you can bet on your favorite games for free, win prizes, and flex to all your friends that you're the best bettor in town. States are regulating sports gambling faster than expected, leaving gaming operators inhibited by rapidly changing regulatory environments and consumers frustrated with a larger fragmented sports entertainment industry. This is resulting in a demand for innovative products in line with the consumer trends and expectations of the next generation of sports bettor. Our solution is a mobile-first platform that offers users a interactive sports betting community with access to both free-to-play and real money sports betting products, leveraging real-time news, odds, lines, scores, analytics, and advice in order to improve player performance and engagement with a centralized marketplace for relevant goods and services. There is a proven appetite for sports betting content, player data, and consolidation in the industry as operators are spending billions on M&A and advertising in order to gain market share and access. Both foreign and domestic operators are entering into hurried partnerships of convenience with sports media companies in order to outperform the competition. Continuing to see beyond this trend, what we recognize is that these operators would benefit from partnering with or even acquiring a sports social media company that has the necessary networking effects in order to achieve a deepened brand engagement and viral growth. On the surface, it would appear that we compete with other social media content publishing and sports gambling companies, but ultimately we view them as our best partners and future advertisers. As a technology company, we have less compliance restrictions as our sportsbook partners, which allow us to operate in both unregulated and regulated states throughout the country. We rely on free user-generated content, while other content platforms have large overheads with expensive full-time journalist and editorial teams. As a niche social network, we cater specifically to sports fans and bettors, which allows them to stay up to date on all their favorite games and teams without having to shift through countless posts about politics or irrelevant life events. We are not a sports betting operator. Our gamified platform serves as a digital marketplace connecting sports fans to goods and service providers in the sports betting industry. We offer a heightened fan experience through player incentives and social engagement. In an unprecedented year for sports, we have achieved over 16,000 total verified users at a $5 cost of acquisition. And we have achieved a 4.2% conversion rate at a $350 lifetime value for our users. On average, our users spend 4 minutes and 15 seconds on our platform per day over 5.9 sessions. We have a proven track record of being able to acquire users for cheaper than our competition and in above average conversion rate for our industry. Our user base is comprised mostly of millennials and Gen Zers. And we specialize in converting potential and casual sports fans into active sports bettors. We will continue to grow our user base and automate our conversion process by leveraging player incentives, our competitive tribal community, and influencer marketing. We have a cost-efficient three-man founding team with an in-depth understanding of our target market and the necessary technological infrastructure to support a social sports book, while assembling a board of directors with extensive experience in the gaming, technology, and venture capital industries. We stand to benefit from an early mover advantage, as most of the startups in our space are 12 to 18 months behind us. In the past year, we raised $850,000 Series Seed round. We acquired a competitor, launched our Apple and Android apps. We obtained our necessary licensing while securing strategic partnerships for our platform and proved the demand for our concept. Major milestones moving forward are API integration with our sportsbook partners, the launch of our website, and the development of our automated advertising platform. We anticipate raising a successful Series B or having a successful acquisition in 2022. While combating the lack of sports during the national quarantine, we predict 2020 to continue to be a loss leader while leveraging our new full-time hires, increased marketing spend, and new innovative features and revenue streams to achieve hockey stick-like growth in 2021 and beyond. We are raising $1.5 million at a $6 million pre-money valuation with $525,000 currently raised to date. This money will be used for sales and marketing, tech development, and new full-time hires. In short, this is a transformative multi-billion-dollar market opportunity in an industry where regulations and demand are driving investment and consolidation. We have a highly profitable business model with diverse recurring revenue streams and a team and board with experience and execution.
Foyr. Everybody, Rich Tarity here, president of Foyr North America. I've been in and around the Philadelphia region my entire life, so I'm a native here. I love all the sports teams. I have built 3 different companies, successfully exited 2 of those companies, and what drives me is building companies, growing sales, growing teams, being a part of startups. I absolutely love it. I guess I'm kind of a startup junkie. And in our latest venture with Foyr, we have this really cool, groundbreaking 3D visualization software that's getting a lot of press in the prop tech space. We've signed some really notable logos in the past year since we brought the technology to the US. It's been great working with our team, just some brilliant minds that have really built out this product. And when I'm not working, I love to play guitar and ukulele, love to record songs, cover songs, play out. I am owner, one of the owners in a brewery and restaurant. So selfishly, I guess, like I tell everyone, I've built my own clubhouse so that I can go play and jam once in a while. Anyway, look forward to meeting everyone, and I hope we get to meet in the virtual networking rooms. Talk to you soon. Bye. Hello, I'm Rich Tarity with Foyr. We're a next generation 3D visualization software. Our business model is simple. We believe visualization is core to the design and real estate industry. We use it in planning and design. We use it for marketing materials. We use it in visualization decision making. Quick intro about us. We operate across 4 different continents. We're a cloud visualization platform that was built from the ground up. We own our full stack of 3D solutions. We've built everything from a clean sheet of paper, so it's all proprietary tech. And we have best-in-class compression. Foyr software is known for its presentation authoring, AI-enabled workflows, we're device agnostic, and we're 100% cloud. We're used by over 153 real estate companies. We have over 17,000 designers and over 1,300 real estate brokers. 27 million square feet of space has been created on Foyr's platform to date, and we've deployed in over 19 countries. Here's the problem. Legacy visualization software was not made for the new age design and real estate industry. Why? Cumbersome, requires heavy investment, it lacks intelligence, also lacks business integration. Here's why Foyr is a solution. Visualization software for the new age design and real estate professional. 100% cloud-based, no heavy infrastructure, super easy to use and collaborate, sign up for subscription and get moving immediately. We have a unified design that's smart, enables business workflow like integration with business apps and CRMs. And we're device agnostic, so very easy to use on smartphones and browsers alike. Who needs visualization software? Builders, property brokers, interior designers, furniture manufacturers, both residential and commercial, as well as home flippers, to the tune of over a market opportunity of over 11.5 billion. Here's the gaps we're addressing though. You either have tools that are highly complex, very expensive, and take a lot of time to learn. Tools like Revit, SketchUp, Autodesk, 3ds Max. Or you have tools that are very watered down, low professional capability, and lack tons of features that are endorsed by Floored, Howells, Planner 5D, Home Styler. We're going after that professional use, but giving people the low expense and very easy upfront training to get started. Here's the use cases. Whether you're multifamily, whether you're a brokerage, whether you're co-working, whether you want to white label our platform, or if you're just a real estate developer with lots of properties. Foyr has over 1,800 accounts today using Foyr and growing to showcase their properties in the new digital economy. We're led by a team of seasoned professionals, folks from Microsoft, entrepreneurs, Google, you name it. Our key investors have been SRI Capital, which led our Series A, JLL, Quex Capital, and Astark. We've currently raised $8.2 million. Financial summary. As you can see with our revenue growth, it's been substantial. Even through the pandemic, we've continued to grow and double our monthly recurring revenues. Our year-over-year revenue growth has continued to climb, and our percentage of international business has declined based on the fact that our US business has increased. When we launched in the US in February 1st of 2019, almost 99% of our business came from international. Now, over 66% of our business comes from the United States, and the rest comes from the rest of the world. We're currently looking at our Series B fundraising ask and allocation. We'll be going out towards the end of the year to lead this with a $15 million investment amount. This is to increase our US expansion into 10 cities. We also want to expand our direct enterprise account sales teams in the US, Singapore, and India. And we want to continue to double down, if not triple down, on our digital marketing and the events. And of course, very important to stay ahead of the curve by investing in our research and development. I thank you and welcome any questions and answers.
Well, now that's a great group of presenting companies, and that now finishes the technology industry tract featured company presentations. As many of you may know, 3 of these companies might qualify to move on to the Lion's Den. The Lion's Den is a great aspect of the Capital Conference, and it will be at our conference finale on September 24th, where these companies, or all of the featured companies along the 3 tracks, have an opportunity to qualify for real investment from real investors. So stick around for that. More importantly, stick around now for the next 30 minutes while you get a chance to connect directly with these companies that presented today in our Remo networking room. So everybody have a great rest of the conference and go PACT.
Thank you once again, Michael and Fox. That completes our technology track for this year's Capital Conference. And I have a feeling there's a company or 2 here that might make the Lion's Den. Again, the finals are going to be held on September 24th from 10 to 11:30 a.m. 3 companies will make it. You're not going to want to miss to see who does. And again, it's time to head to the Remo room. The PACT Remo room is now available, where you can join a table with one of our sponsors, with one of our featured companies that just pitched, or with another participant. The link can be found in your email invite or on your desktop or mobile Capital Conference app. Thank you and enjoy.